expenses, then motor van. So motor expenses is 16 naira and motor van is, so just, and you write the narration, error of principle being corrected. So another one is compensating error. This occur when error of the same amount are posted to the two sides of the ledger. Listen to me. When an error of the same amount are posted to the two sides of the ledger, therefore they cancel each other. Like e.g., we have sales account is undercast by 180 and also a salary account. Now, what we are going to do here is that this is sales account. This is a now we want to correct this error. They said they are posted two sides of the ledger. Now, what we now do is that in as much this has happened, then we now separate it to the account where they belong to. And don't forget, they said sales account is undercast by 180 and also is a sales salaries account. So since they are put under the same ledger, then you separate them and post them to the side where the account where they belong to. So sales, this is undercast by 180 and sorry, it should be on the credit side because it's a sales account. So you write salary, which is 180, then you write sales, which is 180 as well. So that is so actually we are not given the equation, but what we are just giving is that it is undercast by 180. So that means it is the payment, like instead it's supposed to be 180, then it is maybe 360. So and it is this what we call overcast. So if you get difference, you see that it is overcast by 180. But we are not given the information like this. You are just given the amount, the actual figure that it is undercast or overcast. So such thing might happen, and in the course of that, you prepare them into the account which they belong to. So, and another thing is that you can, instead of putting salaries and sales there, you can say undercast by 180, and also this undercast by 180. And if it is overcast, it will be on this side as sales. You know, when you overcast a figure, that means you pay more than you expect to pay. So the person I pay have to return the money back at the end of the day. So if it is undercast, it is here, and if it is overcast, then it is here. Then you prepare the necessary journal at the end of the day. Now we're going to complete reversal of entry. When we're talking about complete reversal of entry, this error occurs when the double entry principles for a transaction is reversed, resulting whereby the account that ought to be debited is credited and vice versa. Now here this is an example. They said a receipt. This is a typical example. They said a receipt of cash from Okondo has been entered on the credit side. And they said on the credit side and the debit side of Okondo's account. Now this cash account. this is cash account, this is Okondo's account. Now this is where error lies. They said a receipt of cash from Okondo has been entered instead of entering it into the credit side, into the debit side of the card book. It is now debited Okondo, which is 230, and that of Okondo, which has to be credited, was debited as cash. This is what we call error of complete reversal. That is what brings about error. It's like, you know, when you receive cash from Okondo, it's supposed to be debited because it must be on the receipt side of the cash. And also Okondo that gives 230 has to be credited. But at the end of the day, it is posted in the credit side of card book and debit side of Okondo's account. Then, how are we going to correct the error? It is a complete reversal. So in the course of that, what we will do is that you will times it by 2. 230 times 2, which is 460 naira, because it has been completely reversed from the entry. So if you return that 230 back, this is it. Let's correct the error. Cash Okondo account, because you can't write 230 here again because it is completely reversed, so it has to be multiplied by 2. So then we now correct the error. Okondo, that is 460. Then Okondo's, which is cash, and that is 450 now. So any information when you interpret, when you are given it in the exam, that it is a complete reversal error. So any complete reversal error must be multiplied by 2 at the end of the day. Then you prepare the necessary journals. Debit, credit side, we have cash, which is 460, and Okondo, which is 460. Then you do the narration that complete reversal error being correct. Error being corrected at the end of the day. So that is what we call complete reversal of entry. Then we'll be talking about error of duplication. This error occur when the same transaction is recorded more than one in the book of account. I want you to note this very well. It is when you're supposed to write 300 and you wrote 600. He said error occur when the same transaction is recorded more than one in the book of account. Take for example, this is let's use the illustration here. Payment of cash 300 to Olu has been entered twice in the account book. This is it, Olu account. This is cash. Do you understand? Now, we are now told here that this one is recorded twice. So it is Olu that received the cash, because it's a payment of cash to Olu, which is 300. And they recorded it again that cash 300. So in the course of that, that is the error of duplication. So what we will do is that you take this one out and take it back to the normal account. Then under cash account we have Olu and Olu, 300 and 300. This is what we call error of duplication. Then to correct the error, you now take this one out completely, and that of cash, which is 300. Olu. Then so you return it. That is a cash. Return cash of 300, and that of cash account Olu. That is 300. That is how you correct the error if such thing happens at the end of the day. Now, you talk about these errors that does not affect. The reason why it does not affect the trial balance is one, because when it affects it is a kind of error that when it affects the first side, it will definitely affect the other side. That is the reason why it does not affect the figure or total number or the arithmetic accuracy of the trial balance. That's the reason why. Like, take for example now, cash and sales. If this one is balanced, it has error of 800, and it affects also this. Because inclusion, when you don't include this, that means inclusion of this also will not occur in the trial balance. That is why we call them that they does not affect the trial balance. So just note, take note of it, that any account or any account, any account must have a two-fold account. We are still applying our double entry principles. That the reason why it does not affect trial balance, that if the error affects the two sides of the account, so that